Maybach, man. Up it. You get what I'm saying? If I do end up recording some things that I do, yesterday, a dude who owns it was working out at things like that. Whatever pops up, just watch the videos. I brought them down cleaning supplies for your bathroom. All you need is something like that. What about you, KB? You learned something? So YouTube, it's your boy Being That Brick. We back with another video. It's gonna be another just a little day in the life, man. Just showing y'all what's going on. Right now we at the West End. We finna goddamn pull out though, for real. Hope everybody having a good and amazing Sunday. Gotta get this money, man. Gotta get this money. This shit easy, huh? This shit easy. He talking about some, yeah. The boy got the vet side, got the track house side, man. I gotta get me one net. It be clean too. Oh, I think I seen this nigga, SRT Breezy. I think I seen this nigga before, bro. What the fuck? It be crispy. Then we got the Cybertruck, Maybach van. Shout out SRT Breezy, man. Let me see. Swain Promotion. Shout out Swain Promotion, man. This shit crazy, boy. Look at the fucking, bro, the track haul just go crazy, bro. I'm on next with the Audi RS7 for sure. I'm on next with the Audi RS7 for sure, bro. What's up, YouTube? Alright, man, let's lock in. It's your boy Being That Brick. We down here in Atlanta. We in the middle of it, in the heart of the city, man. I just came to go on a little walk with you guys. Look at that. One thing about Atlanta, bro, they got some very nice artwork. Like, a lot of people are talented in Atlanta, bro. Like, they know how to, like, draw and shit like that. Like, look at this shit. You see what I'm saying? Like, somebody really painted that shit, bro. Like, don't let your talent go to waste. That's one thing I can say. Don't let that talent go to waste. You feel me? Shit crazy, bro. Shit crazy, bro. Over here on this side too, man. But yeah, basically wanted to come. Got a little watch on. I'm feeling good, man. I'm feeling good. Got my little comfortable drip, little watch on. You know what I'm saying? Face shave. Cause on that last video, I was looking crazy, man. Last video, I was looking crazy. But basically, I wanted to come and talk to you all about risk management. Like I said, I'm gonna post technical analysis videos on my page, but I want to push that psychology through to you all, because like once I started studying psychology, that's when I started making money, bro. Like that's when I started seeing changes, bro. Like I said, I have an account that I flipped 10,000 to 15,000, and it says in a month, but in reality, it is a month. But day-wise, I didn't even trade every day. It's only 5 trading days a week, Monday through Friday. So I would say within that whole month to get that account to 5,000 in profit, I probably placed. I want to say I probably traded like 3 days a week, cause the last week of the month, I only traded 1 time. So I really only traded like fucking 10 times, bro. Hey, how you doing? I really only traded like 10 times to make that 5,000, and that's crazy. In a month, 10 trades, 5,000, and my trades don't last longer than an hour, for real. But yeah, just want to come talk to you all, man. It's currently 8 8:15, 8:16 a.m. I just wanted to, you know, come and talk, come chat it up with you all, man. So first thing first is risk management. First thing I'm gonna tell you all, stop thinking about making money so you can make money in trading. Where the camera at? Stop thinking about making money so you can make money. If you want to make money, think about, focus on the process, focus on getting better, focus on your trading psychology, focus a little bit on technical analysis. So once you do those things, you will start to become better. That's thing number one. Thing number two, you're gonna make money by simply doing what I just told you to do, but you're gonna have to manage your risk. So you're gonna have to manage your risk. So what do I mean by manage risk? Now, do I believe that whole bullshit of like risk 1% of your account? No. So you know how they be like, oh, risk 1% of your account. If you have a $10,000 account, risk $100 per trade. Do I believe in that? No, I don't. If I have my $10,000 account, I was risking $250, $500, sometimes even $1,000 on a trade, sometimes even $2,000. I feel like if you know how to trade, you know how to trade. So why the fuck is you playing around with it? That's how I feel. If I have a $10,000 account and I know how to trade, I'm not finna risk no $100 per trade. You get what I'm saying? But that's beside the fact. The point that I'm trying to make is, as far as risk management, manage your risk. Now, if I'm saying if you have a $10,000 account, I wouldn't advise you to risk like $5,000 per trade, because that means if you lose 2 trades, you out of the game. Honestly, if I was you and I had a $10,000 account, you want to see that account grow, I would risk $250 per trade. Because if you risk $250 per trade and you aim for a 2R, meaning 2 times what you're risking, that's $500. That means every time you make a profit, it's gonna be $500. And that's something that can actually change your life. You get what I'm saying? You make $500 every day in a week. That's $2,500 in a week. And you was only risking $250 per trade. So when I say manage your risk, I'm not necessarily saying like follow the rules of the whole 1% of your account thing as far as managing risk. I'm just saying, if you know how to trade, risk that shit, but risk it smart and risk it consistently. Don't change your risk. So like, if you have a $1,000 account and you're risking $100 per trade, that's cool. Just don't change your risk. Like you make a trade, you make your first trade right, you make $200, you was risking 100. Now that you just made 200, now you're trying to risk 200. Your account at $1,200, now you're trying to risk $200 per trade. No, keep the same risk until you build consistency. That's what I'm saying. Once you build consistency and profit, then switch the risk on the account. So remember that. Keep the same risk until you find consistency. Once you find consistency in risking that amount of money, that's when you can go ahead and level up. That's when you can go ahead and start risking more money. But don't risk $500 on this trade and then on the next trade $1,000 and then on the trade after that $300. Like don't change your risk based off of your emotions. Remember I told you got to be robotic in the game of trading. Do not change your risk based off emotions. Keep your risk the same and be consistent with your trading strategy until you start to see progress with risking that amount of money, and then up it. You get what I'm saying? That's the key to becoming a successful trader. The key to becoming a successful trader is managing your risk. It's a lot of things that make successful traders, like being disciplined, like risk management, psychology, technical analysis, being patient, not being greedy. It's plenty of factors that comes into being a successful trader. But risk management, I feel like risk management is one of the most important things that you have to learn how to conquer when it comes to trading if you want to make money. Because it's like, once you got the technical down pat, Once you got the psychology down pat, the only thing that's left is risk management. You get what I'm saying? That's why I say risk management is the most important thing, because that's the only thing that's like, a lot of people who are not successful in trading, risk management is the only thing that's stopping them from becoming a successful trader. They have the technical analysis down pat. They have everything down pat. They just don't know how to manage their risk. They lose $100. They in their mind, their goal is to risk $100 per trade, and then they lose their first 2 trades, risking $100, and they get mad and be like, "Fuck! Now I'm finna risk 500. I'm finna make it back." You get what I'm saying? Revenge trading, that's not the way to go. Never revenge trading. I keep licking my lips, y'all, because it's like, I don't know if I'm dehydrated. Cold. It's a little cold out here, but I'm trying to make this content for y'all. I'm trying to get through to somebody, bro. But yeah, like I was saying, where was I at? Yeah, don't revenge trade. Revenge trading, you automatically ain't gonna make money in trading if you revenge trade. You automatically X yourself out right then and there. That sun beaming, boy. You automatically X yourself out right then and there trying to revenge trade. My best advice to you, buddy, is to manage your risk, is to keep the same risk until you find consistency in being profitable. That's my advice to you, my young brother. Anybody who pursuing trading, anybody who's new in trading, who just came across my channel, risk management, bro, and psychology. That's why you're going to see a lot of these psychology videos and a lot of these risk management videos, because too many people preach technical analysis. Too many people preach fair value gaps, liquidity sweeps, order blocks, mitigation blocks, rejection blocks. But not enough people teach psychology, discipline. Not a lot of people teach risk management. Not a lot of people teach the correct and proper way to look at the markets. You're not supposed to look at it in a money aspect. It's all psychological. You're supposed to look at it in a process aspect. You're supposed to focus on the things that you're supposed to do to become a better trader. Fuck the money. The money is a part of trading. The money is going to come. It's all about the way that you think. It's all about this. It's the thought process behind placing a trade. It's the person you become, bro. The money is a byproduct of a successful trader. The money is a byproduct of a successful trader. Be a successful trader. Fuck the money. It's gonna come. It's a part of being a trader. Just be successful, bro. It's all about being successful. Fuck the money. Be successful. Do the right things. Follow your strategy. Trade in the time zone you're supposed to trade in. Manage your risk. Study trading psychology. Be relentless. Go after it every single fucking day until you start crushing that shit, bro. That's how you do it. Keep going until you crush it, bro. Don't never stop. You know what it takes. You know what you got to do. You know what you're doing wrong. You know what's stopping you from making money in trading. And hopefully, on top of you knowing what you're supposed to do, hopefully this video helped you. It's not going to be a long video. I'm going to end it right there, man. Just keep it short, sweet, and simple. Oh, as a matter of fact, I'm not going to end the video right here. I'm supposed to be going to the gym today, so I might make some content when I'm in the gym. I might record me doing some workouts or whatever the case may be, and then probably give a little more motivation and end it right there. But yeah, I just be trying to get through to y'all, man. Some of y'all folk thick in the skull, bro. Some of y'all folk hard-headed, bro. You don't listen. That's why you're not making no money. You have to listen, Linda. Listen, Linda. Listen. You know what it takes. You know what you got to do, bro. This shit, trading is really easy. I feel like because there's money involved, that's why people make it hard. I feel like trading is like, since people know like, oh, I can get rich off of this. Oh, I can just place trade and get rich. You know what I'm saying? Since it's that easy to make a brokerage account and sign up and start trading, I feel like people think that it's going to be easy to make money. But the paradox is, even though trading is hard to 98% of people, I feel like trading is extremely easy if you just do the right things. 98% of people don't do the right things. You get what I'm saying? If somebody doing something, it can be done, period. That's how you gotta look at trading. If you see a person who's a successful trader, like I'm a successful trader, you have I'm an upcoming successful trader, meaning like I just started making money in trading. But you have people who've been killing it for years, like Q Banks, Lambo Rayul, TJR Trades. You have many of traders, like one of my bros, he showed me a trader called Avel Trading. He's 18, he just bought a Corvette off trading. Like, you have people who are killing it, bro. So if I just look at it like this, if we can do it, you can do it too, period. If we can become a successful trader, you can become a successful trader too. I'm 16, bro. 10 years later, look at me. Finally started making consistent profits, and I created this channel to simply tell you and give you the game on what I wasn't doing right, so you can skip through time a little bit. You get what I'm saying? I'm gonna give you the game for free. What you gonna do with it? City of Atlanta, so beautiful. It's so beautiful. Guys, I'm about to head to the gym. In this gym, bro, they do be playing loud ass music. So I know if I record, I'm gonna get copyrighted. So if I do end up recording some things that I do in here, I'm gonna mute it, but you all will be able to see like the workouts that I do and stuff. But if I do end up recording, I'm definitely gonna have to mute the video. But let's get this workout in. Alright guys, I just left the gym, just got in a good workout. Now I'm finna head to Walmart. It's literally only one item I need to grab, but knowing my girl, she gonna start grabbing like extra shit, but we're going in there to get some Clorox spray for the bathroom. The bathroom is not extremely dirty. It's actually clean. We just mopped it yesterday, but we just like to keep supplies on hand and just keep the house clean. You know what I'm saying? Clean house, clean mind. You get what I'm saying? So you want to stay clean. You want to stay crispy. You can't have a clean mind and a strong mind and your surroundings dirty as fuck. You gotta surround yourself with like nice frequency, nice luxurious items and things. Like me being in this area, I always see exotic cars. I always see like Trackhawks, Corvettes. I seen an IRS-7 at the gym yesterday. A dude who owns it was working out at this exact same gym. I've seen a lot of Lucid cars, which are the new electric cars. I've seen like all type of new cars and shit I ain't never seen when I used to live on the south side. You get what I'm saying? So environment is definitely key. Like you're supposed to be working hard to get out that environment, man. You gotta change your environment. You have to, bro. You can't stay in the same environment you're in. You have to grow, bro. When you change your environments, you're gonna start to grow because the frequency of the environment, if you move into a better environment, the frequency is higher than like living in the hood, which is low frequency. So if you live around or live in a high frequency area, bro, by nature, things are going to start to happen in your life that's going to make your life vibrate at a higher frequency than what it was vibrating at first. But yeah, with that being said, man, we finna head to Walmart, man. All right, y'all, we in Wally World. Finna get us some cleaning spray for the bathroom. But yeah, man, risk management is what it's all about, bro. If you're not making money in your trading, just think about this video. Are you practicing risk management? If you're not practicing risk management, that's probably why you're not making no money. It's really simple, bro. You got technical analysis. You got psychology, and you got risk management or money management. To me, those are the only three components of being a successful trader. Master technical analysis, master your trading strategy, master the way that the markets move, master everything, the fair value gap, the liquidity rate, uptrend, downtrend, candlestick patterns, whatever you doing, whatever is a part of your strategy. Basically master your strategy. Understand your strategy. You have to understand your strategy in order for you to make money off your strategy. Second thing, psychology. Master trading psychology. Master how to think. Like I said, go check out Mark Douglas. Go to YouTube and type in trading psychologies for beginners. Type in trading psychology, Forex psychology, anything like that. Master that shit. Watch as many Mark Douglas videos and as many psychology videos on trading as possible so you can get a good grasp for how to look at the markets and how to think. 3, money management. Watch money management videos. Type in money management with Forex on YouTube. Type in risk management in Forex on YouTube. Things like that. Whatever pops up, just watch the videos and simply study it. It's a laundry detergent, mops, broom, bleach. The bleach on this aisle.
This is all-purpose cleaners.
Okay. Let me see these are. Say hey, Momo. Both of y'all try not to show y'all self. My daughter don't want to show herself. But yeah, master those 3 components when it comes to trading. Master those 3 components: technical analysis, psychology, money management, or risk management. Master those 3 components so you can make money in trading. It's literally that simple. It's that easy. It's that easy. Oh yeah, we need another brush. We need another brush for the bathroom. Probably this one, huh?
Yeah.
Big old brush. I told y'all we're gonna end up getting extra shit. Brush, boom. Now we need spray. Now we need spray, y'all. What? I wanna shine a hood in your eye. In your eye. Bro, we need spray, bro. But yeah, man, y'all folks be productive, man. Be productive. We decided to go with the Clorox bathroom bleach foamer, man. This is not no commercial. This is just what we do. You're not supposed to have all them down cleaning supplies for your bathroom. All you need is something like this. Just keep it nice and simple, nice and easy. Don't mind the watch though. Don't mind the watch though. Hey, watch though. In Discord, got my boy KB, got my boy LH. All right, so boom. I'm gonna get straight to it. My brother. I'm going straight to the entry time frame because I already got my parameters marked out. You see, I was productive today, bro. I went ahead and marked out my parameters before we hopped on, so it can be easier for me to teach. You get what I'm saying?
Yes, sir. You already had it down pat.
Bro, what? I was ready for this shit, bro. I'm like, he said we hopping on at 7. It's 6 o'clock. Let me get right. You feel me? So I trade London and New York session, but lately I've been trading in London session. I'm not gonna lie. So, but I'm gonna go over both for the sake of this video. So right here, when I trade London session, I trade between 2 to 5 a.m. And when I trade New York session, I trade between 8 to 11, but specifically 8:30 to 11. But on this, you're gonna see 8 to 11. When I trade London session, which is I want to enter between 2 to 5 a.m., I'm simply looking for price. If I'm buying, I'm simply looking for price to take out previous days Asians range low. This line right here is Asian range high, and this line right here is Asian range low. Previous day is 18 to basically midnight or whatever. So this is the lowest low that it made, and this is the highest price point. So as you can see right here, like I said, I trade between 2 to 5. It's called a kill zone. So within this kill zone, I'm looking for liquidity. I'm looking for Asians range low liquidity to be swept, sell side liquidity, because I'm buying. So as you can see, the liquidity was swept right here. So once it's swept, I simply wait for a high to be broken with the fair value gap. So right here, this swing high, this is the first swing high that was broken. Like I was telling LH, when price does the liquidity sweep, we simply stalk price, bro. We just stalk it. We wait for that high to be broken. This was a swing high right here, but this swing high right here didn't break it. It almost did, but it didn't. It's like damn near equal, but this one is above it. It came down. It used Asians range low as support, and then right here it broke the high. We stalking it, like we literally just looking at this shit. We already knowing what it's gonna do. We already know what we're looking for. Once that high is broken, we literally want to see when it broke the high, was a fair value got created in this price swing that broke the high. If the answer is yes, you want to enter at the low of the last candle that made the fair value gap. So this Do you know the fair value gap is a 3 candle pattern? This candle right here, this candle right here, and this candle right here. Basically, this candle right here, it just broke through. It didn't give sellers, huh?
What was that? I just heard like a.
Oh, I don't know. Can't it probably the fucking shit was messing up. The audio probably was messing up. Can you hear me?
Yeah, we can hear you, bro.
Okay, so boom. So once price breaks that swing high right here with the fair value gap, we literally buy at the low of the last candle that makes the fair value gap. So this last candle low is right here. The next candle opens up and literally taps into that low, taps into that fair value gap space. So you would literally buy right there. So we will go long right here. It's 2 places you can put your stop loss. So you can put your stop loss at the low of the first candle that makes the fair value gap, or you can put your stop loss at the low of the second candle that makes the fair value gap. It's really completely up to you. The person who taught me ICT, Michael Hudson, he teaches to put it right here, but sometimes he puts it right here. It literally is all on you. But you know, the smaller your risk is, the better the ratio would be. You get what I'm saying? So, like, the faster you would get out the trade, essentially. So let's say you would aim for 1 to 2, it would give you a 1 to 2. So let's say you risk 1,000 to make 1,000, you would have entered at 328, and the trade would have been over at 444. That's literally like an hour and fucking 18 minutes or some shit like that. So you would have made, risking 1,000 to make 2,000, you would have made it in an hour and some change. If you would have put your stop loss right here at the low of the first candle that makes the fair value gap and aim for a 1 to 2, you would have had to wait a little longer, but you still would have got the trade. Boom. So now we come over here. We have New York session, which is 8 to 11. And like I said, we draw out. So with New York session, we draw out, it's supposed to be London's high and low, but it would literally be irrelevant in this scenario simply because London's high and low is all the way down here. So we know down where price ain't finna just come up here and just shoot down, like it's not finna even conform to this shit. It's already gone right here. The move was right here. So this day, would I have placed a trade? Probably not. Simply because like after 8:30, I didn't get a, well, let's see. Nah, I wouldn't have entered. I probably would have missed out on this because like I want to see a liquidity sweep after 8:30, but the liquidity sweep has to be a liquidity sweep from the 15-minute chart. It has to be a 15-minute low that is swept. If not, it has to be a liquidity sweep of London sessions low or high. You get what I'm saying? So that would have been a day that we wouldn't have placed a trade because we didn't see what we wanted to see. So right here, we have London session again, 2 to 5 a.m. Y'all can still hear me?
Yeah.
Okay, bet. So this line right here, this white line is previous day Asian sessions high. And this white line right here is previous day Asian session lows. So you have Asian session, London session, and New York session. Boom. Like I said, Asian session is basically from 5 p.m. to midnight. So this is the lowest point that it made from 5 p.m. to midnight. Midnight is right here at 0000. What the fuck? Something ain't right. Hold on. Okay, this Asian session low right now. So that Asian session low. Asian session low, Asian session high. So as you can see, price took out Asian sessions high first. So what is that an indicator of? First of all, when price break a high, that's an indicator that price is overbought, meaning it's time for sales to come in. I'm finna show y'all boys how to stretch that trade out. You know, a lot of people aim for 1 to 2, and a lot of people aim for 1 to 1s like me, but I'm finna show y'all how to catch big moves to the point where you can risk 100 to make 1,000, and then you won't really be stressing on trades when you lose because you know that when you win, you gonna be making 10 times what you risking or 7 times what you risking. You get what I'm saying? A lot of people be stressing because they only aiming for 2 times what they risking, and then when they go on a losing streak, they be stressing because it's like when they win, they only make double what they risking. How about try making 7 times what you're risking or whatever the case may be? So right here we have Asian sessions high. Like I said, 2 to 5 a.m. It's called a kill zone. Meaning this is where you want to see your setup form, but it has to be within the parameters of what I'm saying. If you selling, Asian session high has to be broken. It was broken right here. Once it was broken, you simply stalk price and you literally just wait for a low to be broken. Like, I'm being very literal. Like, everything I'm saying is literal. You literally wait for a low to broke. Like, when it's going up, don't think like, oh my God, it's going up. Like, that's the trend. No, you just wait. It's still between 2 to 5. You have to wait. The low is broken right here at 3:02. The low is broken. What time the low is broken, it doesn't matter as long as it's between 2 to 5 a.m. Okay, boom. Fair value gap. Okay, once that fair value gap was created, as you can see, the next counter price tapped into it. Now, this is you would have entered right here. You would have put your stop loss at the high or at the high of the second candle. Let's say you would have went for the high. We're going to put it right here at the high right there. I'm finna show y'all something. So let's say you would have aimed for a 1 to 2. Okay, cool. You would have got your trade, but this is how you see this. You see how the move came all the way down here? I'm finna show you how to know that it's gonna do that, or to get out at a better logical area. So this leg right here, so this low and this high. Y'all hear me?
Yeah.
Oh, okay, I'm just making sure y'all hear me. So boom, so you got this low.
Yeah, bro.
Okay.
The only reason that is I set my microphone on mute. That way you can have best audio quality, bro.
Oh, okay, bet. So you got this low and then you got this high. So this is how you catch a bigger move. So this is the leg that took out Asian sessions high, right? So this the leg that took out Asian sessions high. You stalked price. You did what you was supposed to do. You waited for a low to be broken. Did it create a fair value gap? Yes. Price entered the fair value gap. You sell. Some people, we don't want this small move. We're not trying to risk 1,000 to make 2,000. Let's say we want to make some more money. How do we know what target to aim for? I'm finna show you. Premium and discount. When you have a range like this leg right here, this low to this high, this is called a range. The middle point is called equilibrium, which is this white line right here. If price goes under equilibrium like it did right here, that means that price is oversold. You want to look for buys. And as you can see, it gave you a nice buy. When it makes the swing high and breaks a low in this range right here, once it makes the swing high and break a low, anything in this area needs to be sold because price is overbought. So we trade fair value gaps. Let me take this shit off. So we trade fair value gaps. So we will take this Fibonacci and we will mark it from the low to the high that took out Asian sessions high. As you can see, this middle point right here is equilibrium. We look for a fair value gap near equilibrium on this same time frame. So right here, we have this is a fair value gap that is near equilibrium of this price move. What did I say? When price comes under equilibrium, you want to look to get out, but you want to get out at a fair value gap. You want to get out. It's called, you want to get out at a discounted price because you're buying it at a premium. You're not buying, you're selling at a premium and you're getting out at a discount. Vice versa, if you was buying, you want to buy at a discount, meaning like you want to buy below equilibrium, which is right here, and you want to get out above equilibrium, which is a premium, but you would have to look for a fair value gap to get out at. You're basically trading from fair value gap to fair value gap. So like I said, you draw the swing out from low to high, you get equilibrium, near equilibrium, you have this fair value gap. As you can see, that's where you would get out at. You would literally get out right there. So you would ride the trade until it touches the high of this fair value gap, which is the low of that last candle that creates it. So you would get out right here. So instead of your trade being a 1 to 2, now you got a 1 to 4.47. But let's say you would have put your stop loss at the high of the second candle that makes the fair value gap, like sometimes I do. That trade would have switched from a 1 to 4.47 to a 1 to 11.79, bro. And guess what? The trade would have finished between 2 to 5 a.m. You would have got in at 3:06 and you would have got out at 4:30. So if you was risking $1,000, you literally would have made $11,000 in 1 hour and 30 minutes. That's how you catch big moves to the point where if you lose your next trade, you're not really worried. That's one thing I had to learn. Like I learned this like last week. I was like, I be worrying when I lose because I'm aiming for 1 to 2. But if I have logical reasons to like get out at farther targets and all I have to do is just hold the trade and be patient and trail my stop loss, when I make that trade, I'm literally making 10 times what I'm risking. So when I lose one trade or lose 3 trades in a row, I'm not tripping because it's like that next trade that I get, I'm going to make 7 times my risk or 8 times my risk. You understand what I'm saying? A lot of people be panicking or think they can't trade when they simply can because they not catching nice, decent sized moves. Now trying to aim and trying to get out right here, that's being greedy. Trying to get out right there, that's being greedy. You just get out at the fair value gap. You can get out at the low of the fair value gap if you want to. You can get out at equilibrium of the fair value gap, meaning the middle point. But just get out at the fair value gap. Don't try to hold the trade through the fair value gap because that's when it's gonna start reversing and stop you out. That's why you get out when it hits it. You get what I'm saying?
Yeah.
So right here, we have, this is New York session. This is what my boy LA's like to trade. That boy like to trade that New York. So essentially my original strategy is this. It's what the strategy that I trade is what I'm teaching you, but with New York is I draw out 8:30. Right? I will go to the 15-minute, which would be I will wait for a 15-minute low that was created near 8:30 or before 8:30 to be broken. So this low right here on the 15-minute chart, I'm pretty sure it's a swing low. It's a bigger swing low. So I would have drew it out, and I would have, like I said, 8:30, which is right here. This swing low was created before 8:30, right? 8:30 is right there. Swing low was created on the 15-minute chart. I just don't feel like going to the 15-minute chart because I'm gonna have to go back down and scroll back and all that other shit. But once it broke this low right here, you, like I said, you stalk your trade. This my entry time frame. This is the 15-minute low. It's 8:30. So in New York session, if my bias is bullish, I simply look for price to break a 15-minute low that was created before 8:30, the most recent low. The most recent significant low that was created before 8:30 on the 15-minute chart, that's the low that I want to see rated. As you can see, around 9:50, 10 o'clock, it took it out. You simply wait for a high to be broken with the market, with this placement, meaning a fair value gap. Right here, we got the price to break the high, but we didn't get a fair value gap. So what do? We simply just wait. We wait until a high is broken with the fair value gap. This high right here, this high is the high that was broken with the fair value gap. Any high before this that was broken, price did not create a fair value gap in that swing. So that means you do not enter yet. You only enter when the high is broken with the fair value gap. As you can see, price came, created a fair value gap, but it kept running. It kept running created multiple fair value gaps. You have a fair value gap right here. This is the last fair value gap that it created, that it came into before it took off. So you could have entered in this fair value gap right here. Possibly you would have got stopped out, which is okay. So you enter at the fair value gap. You put your stop loss. You can put your stop loss right here. If you would have put your stop loss below the first candle's low that made the fair value gap, if you would have aimed for a 1-to-1, you would have got the trade. Meaning if you would have risked 1,000 to make 1,000, you would have got it, as you can see. But if you would have aimed for a 1-to-2, you wouldn't have got the trade. You would have got stopped out. If you would have put your stop loss below the low of the second candle, like I said, I do sometimes, you could have possibly, you could have got a 2-to-2. You could have actually got a 1-to-2. I mean, I'm talking about 2-to-2. You could have got a 1-to-2. If you would have put your stop loss at the low of the candle right there that makes the fair value gap, you wouldn't have got stopped out, and your trade would have been completed in 4 minutes. So if you would have risked 1,000 and made 2,000, you would have made it in 4 minutes. That's all we looking for. We have New York we have London session. We have Asian sessions low and Asian sessions high. Why do I keep saying, why the fuck was I drawing this shit out wrong? Because that's definitely not what you call it. This is definitely Asian session low right here. Because that's midnight. Where midnight at? Damn, my shit wrong. Right here. This Asian session low right here. So as you can see, price broke Asian sessions low. All right now. So before I go through what I'm finna go through, I want to tell y'all, I just told y'all my strategy, right? I told y'all how I enter. I told y'all why I enter. I even told y'all how to catch bigger moves, getting out at equilibrium of the price swing that takes out, takes out the liquidity. If you place your first trade of the day, or if I place my first trade of the day and I get it wrong, I give myself one more chance to place another trade. After I place that second trade, whether I make money or not, I'm done trading for the day. So if I lose on both, I don't go in and be like, I have to win today. No, I just stop trading. With that being said, Asian sessions low was taken out after 2 o'clock. That's what we want to see, between 2 to 5 a.m. Once Asian session low was taken out, we wait for a swing high to be broken with the fair value gap. Right here, you have a swing high that was broken with the fair value gap. So you would have entered once price came into that fair value gap. We're not trying to be perfect. We just trying to make money. As you can see, if you would have put your stop loss at the low and you would have aimed for a 1-to-2, you would have got stopped out. You would have got stopped out no matter what you aim for. Basically, you would have got stopped out. That's perfectly fine. You give yourself one more chance. What am I giving myself another chance for? Once price stop me out, we wait for another swing high to be broken with the fair value gap. Right here, you have this swing high that was broken. And the fair value gap overlapped the high. That's good. This leg right here, this price leg that took out this swing high, it has multiple fair value gaps in it. As you can see, you want to enter on the last fair value gap that was created, because you don't know if price is going to come down to these fair value gaps. You want to enter at the last fair value gap that was created. And also what I want to say is price is fractal, meaning what happens on the higher time frame happens on the lower time frame. This is actually what I mark my charts out. This is how I trade. This is like how I mark my chart out on the daily chart to determine the bias. I look for the last fair value gap that was created. Let's say this fucking Wednesday right here. And let's say this Tuesday and got down Monday. And let's say this Tuesday made the fair value gap. I would look for Wednesday to come into the fair value gap, and then I would start looking for buys on the lower time frame to rise higher. Price is fractal. What it's doing on the 2 minute, it does it on the daily. It's the same shit. It's fractal. So look, this your second chance. Price broke that high with that fair value gap. You enter right here. Once price comes back into it, you put your stop loss. You can put your stop loss at the low of the second candle or the first. We're gonna do the second, cause that's really how I trade for the most part. And you would aim for a 1 to 2. You would have made your money. So let's say you risk it 1,000 to make 2,000 on this trade. You would have got stopped out, so you would have lost 1,000. But then on this trade, you would have made 2,000. So you would have been up 1,000 for the day, and then you done trading. Now, granted, you could have aimed for agent sessions high if that's what if you want a logical area to get out at, get out right here. Get out at these highs because that's where liquidity at. You got equal highs. ICT teaches when you got equal highs, it's a lot of liquidity resting above that. And then there's also agent sessions high anyway. So some people, you could be conservative, aim for a 1 and 2, or you be like, oh no, I want another logical area to get out at. Get out at agent session high, which is right here. Get you your 5,000. You lost 1,000 on the first trade. This trade 5.53. That's what, 5,000. We're gonna say 500 and fucking $30 or some shit like that, or fucking $5,500 or whatever the case may be. And you're risking 1,000 to make basically $5,500 in the time span of nothing, bro. These trades don't take, like I said, I don't like holding my trades longer than an hour, because I've basically mastered my strategy to the point where I know my trade not supposed to take that long to finish. My trade not supposed to take longer than fucking an hour, 2 hours, 3 hours. This is a scalper entry, bro. We basically are scalpers, y'all. We not swing traders. We not day traders. Day traders meaning you hold the trade for a session, 5, 6, 7, 8 hours. No, we scalpers. We get in and get out. We get in when liquidity is rated, and we wait for market structure to shift. We enter on the fair value gap, and we get out at logical areas. If we don't have a logical area to get out, we just simply aim for a 1 and 2, meaning we risk whatever we risking. We get out at 2 times what we're risking. This trade, you would have got in at 252, and you would have got out at 354. That's literally an hour and 2 minutes. Remember, I told you my trade not supposed to take longer than an hour. So 2 minutes after it was overdue, I would have made my money. So that's just what I wanted to share with you all today. And I also want to say my trading strategy, or the way me and LA trade, we look for these things within certain kill zones, but the trade doesn't have to finish in that kill zone. We just look for the trade within this time frame. But let's say one day something happened, the sky turned orange, and got down this trade, I hit TP outside of 5 o'clock at like 6 or 7. That's perfectly fine. That's not what the strategy is. The kill zone is not for the trade to enter and finish inside of it, even though it does because I'm scalping. The kill zone is for the entry, not the exit. Although you still exit within this time frame, that's not what it is. It's the entry, bro. Kill zones are entries, not exits. So if you was to be in the trade and it's past 11 o'clock and you still in the trade, that doesn't mean nothing. Did the strategy form within this time parameter? If the answer is yes, okay, you good. Just wherever your logical TP will, just let it hit it. It's probably just taking too long because it ain't no volatility, ain't no news, or whatever the case may be. But that's what I wanted to, share with you all. I'm gonna really leave it at that because I don't want to overdo it. I feel like I did some solid back testing. You know what I'm saying? I feel like
yes, sir. That was a quick session, bro.
Yeah, I feel like
keep.
Yeah, now I would ask KB, and I'll ask you, based off everything that I just showed y'all, did y'all have any questions based off of what I just showed y'all?
You got the first, KB.
Because I know it was a lot.
I think the London side is fake valid, though.
You said what?
I said I think the London strategy is fake valid.
Yeah, the London strategy is definitely valid. You said fake valid or valid?
Like, it's the same thing. Like, valid.
Oh, valid. Yeah, it's definitely valid. I like trading London session because a lot of commercial banks, the banks that run the world, they trade London session, bro. They trade London and New York session. They trade every session, but they mainly trade between 2 to 5 a.m., bro. Did you know that between 2 to 5 a.m., it's a 75% chance that price is going to make the high or low of the day? So if I'm trading London session kills on 2 to 5 a.m. and I'm catching the low of the day, I can really hold my trade until price breaks previous day's high. I can really be out here trading, risking a thousand to make 20,000 in one trade, bro. I just don't do that. You can literally catch the low or high of the day and ride it out until price takes out the previous day's high or low, depending on if you buying or selling. So let's say today Thursday, bro, and let's say yesterday was Wednesday and Wednesday's high is right here. And let's say it's 2 to 5 a.m. and today Thursday, and you looking for a buy. Once price breaks Asian session low and you find your buy based off what I just showed you, market structure shift with displacement and a fair value gap, instead of getting out at a 1 to 2 or instead of getting out at Asian sessions high of previous day, bro, you can literally hold your trade until price takes out previous day's high. So instead of aiming for a 1 to 2 or 1 to 5, bro, you can get like a fucking 1 to 20. You get what I'm saying? Me personally, I don't like holding my trades for longer than like 1 hour or 2 hours. But I could do the trade just to show you like how it's done. I'll probably make a video of me catching the higher low of the day and literally riding it out until it takes out the next day's higher low. But yeah, London session is definitely valid because like I said, you just simply marking out previous days Asian session higher low. And if your bias is bullish based off of your top-down analysis, you simply just wait for Asian sessions low to be broken between 2 to 5 a.m. And then you simply go to your entry time frame. Mine is the 2-minute. You wait for price to break a high on that time frame with a fair value gap and you enter, bro. It's literally that simple. You look for the same thing in New York session, but with New York session, you want to mark out London session highs and low. And previous day highs and lows. It's the same thing, but I feel like London is easier because you just automatically know you using Asian session to basically wrapping your trade around the previous day's consolidation. You know, Asian session is basically the consolidation towards the end of the day. It's the last 5 or 6 hours of the day, and that's when price is consolidating. You get what I'm saying? It's the last 6 hours of the day, and price is basically just doing this. And when it's doing this, it's basically creating liquidity above the highs and lows within that time frame, within that session. Asian session ain't nothing but a session that creates a whole bunch of fucking liquidity, bro, to fake people out of the market. That's all it's doing. Anytime you see price doing this, consolidating, meaning like it's not expanding or retracing, the market can only do 3 things. It can only expand, retrace, and consolidate. Expand is when it shoots up. Retrace is when it pulls back to go up higher. Consolidation is when it does a whole bunch of scribble scrabble. If you see price doing a whole bunch of scribble scrabble, there is a 100% chance that it is about to expand. You just got to figure out which way it's about to expand. And we figured out, we mastered the direction based off where it's gonna go after consolidating, based off the liquidity sweep. It's basically a fake out. So if Asian sessions range is consolidating, you basically know that it's finna do a big ass move in London session. Oh, how do you know which way it's gonna go? Whichever way it goes first is the wrong way. It's that simple. If it breaks the low, it's not really breaking the low to go lower. It's breaking the low to take out sell side liquidity to get people to sell. And they're going to buy what they're selling. The big banks are going to buy the sell stops. They're going to buy the sell side liquidity, and it's going to make price go up. It's going to cause price to rise higher. And that's basically the theory and the logic behind the strategy, trading it in London session. That's the whole logic behind it. But did you have any questions? Any more questions?
Nah. That's it.
But I know a question you asked earlier. You said how long you been trading. I've been trading and studying since I was 16. I'm 26. How long have I been profitable? Like 7 months. Like I was telling LH Trades, I just started being profitable and I started when I was 16. But it doesn't take that long because I know people who got rich off Forex in 2 years. I know people who got rich off Forex in 3 years. I know somebody who got rich off Forex in 10 months. So it just took that long for me because I had a lot going on and I just couldn't wrap my brain around the correct way to trade. I thought I'm like, bro, I'm doing everything right, but really I was doing everything wrong. Like I wasn't thinking the right way. I was aiming for too far of a profits without having logic behind it. I was basically trying to trade based off what I wanted to happen versus trading on logic. You get what I'm saying? So it took me a while to snap out of that loop. It was a loop. And it took me a while to snap out of it. How did I snapped out the loop? By studying trading psychology. Once I started studying trading psychology, that's when I snapped out the loop. I'm going in the loop. I started studying psychology. I'm like, hold on. I'm in the loop. You get what I'm saying? Like, I'm thinking wrong. And that's when I started switching shit and I started taking away shit and then making everything simple as fuck. Like what I just showed y'all, bro, I can literally teach that to a fucking 10-year-old, bro. Like I just literally step by step, y'all folk. You feel me? Like, that shit is literally that simple to the point where I can sit a 10-year-old down, teach them candlesticks and trends, and then I can teach them my strategy, and they will not be confused at all. They won't be like, oh, what about that? What about that? Don't worry about nothing else but what I just told you. You get what I'm saying? And you're going to make money. Manage your risk. That's it. The strategy works. You have to make it work.
Nice.
You got to make it work by managing your risk and not getting emotionally tied to the trade. Like, you got to think about it. If I just back tested this strategy and I just showed you where I could have called a 1 to 11, and let's say the market opens up and it was a possibility where I could have called a 1 to 11, but I didn't. But when I go and back test it, I see that price actually gave that to me. What does that mean? That doesn't mean that the strategy don't work because the strategy played out. That means I did something wrong. You get what I'm saying?
Bro, and sometimes it ain't mean you did something wrong. Sometimes it's just the randomness of the market, and that we gotta accept, bro. You know?
No, based off what I'm saying, that does mean you did something wrong. I said that if the market opens up and I place a trade, and let's say I get stopped out, let's not say I get stopped out. Let's say I got a fucking 1 to 3 or something. But when I went back and back tested the strategy, I seen that it gave me a 1 to 11. You get what I'm saying? I'm basically saying was trying to tell him that if you back testing this strategy on your spare time and you see that the shit working, I'm basically trying to tell him that when he go live trade it, if he not making money, that simply means that he's doing something wrong. That's all I'm saying. That means that he's like, unmute your mic.
I thought you was talking about like once you in a trade. But
No.
bro. I mean, if you know the strategy works and you can see it in the back test, there's no reason for you not to execute on it. You feel me? Like, since this is probably the first time you've seen it, what I would recommend for you to do is like do a whole demo week.
All right, you guys. So we just finished up another session going over basically my trading strategy, going over London session and New York session, how to enter the markets, where to get in at, where to get out at, how to find those nice good trades that with those big risk to reward ratios. And this is basically going to end today's video. We got my boy LH Trades, basically, and we got my boy KB. And I was basically they came to spend time with me so I can show them basically the way that I trade, and hopefully it was insightful to them and helpful. What y'all got to say?
Yo, y'all trying to join a Discord group that y'all can learn how to trade from A to Z, and y'all gonna have a good mentor, somebody who doesn't just teach you how to trade and then gets off the call. No, he shows you from point A to point B all the way to point Z on why you should enter and why you should exit. And the best thing, it's for free, bro. So y'all can't be missing out. Go ahead and join.
Yes, sir. Yes, sir. What about you, KB? You learned something today?
Nah, I did learn math stuff tonight, actually.
Yeah,
So
tonight.
W
Yeah.
class, bro. W class. Y'all
Yeah.
should join up, no cap.
Yes, sir. That's all I like to hear. That's all I like to hear. We're going to keep it rolling. I'm going to keep dropping videos, keep dropping bangers, and we just going to keep growing my YouTube channel where I give out free information. In the playlist section, I have a Forex psychology playlist, and I have a day trading playlist as well where I show you all my trades, why I took them, how much money I made, and stuff like that. The Forex psychology playlist is basically just a playlist of psychology videos like risk management, how to look at the markets, X, Y, and Z. And then I'm about to create a beginners trading module, if you will, but I'm going to implement my strategy in it along the way, and it's basically going to be a step-by-step playlist on how to trade for somebody who doesn't know anything about trading. So yeah, you guys have to stay tuned for that. And with that being said, it's your boy Billionaire Brick, and we out.